All right, so I welcome everybody to my YouTube channel. Okay, let me another you another chats. Okay, so it's been a while. It's been a very long time I dropped something for you guys, and I know a lot of you would have actually missed me. Oh, so this morning let's discuss money transfer. First of all, 2025 is about to go to an end, and then I wish everybody Merry Christmas and Happy New Year. So let me just say this is the ending of the year gift I'm gonna give you. I'm gonna give you all. All right, so and 2026 is really approaching. I hope you guys have the new plans, for 2026, and I just hope everything is gonna be all right by then. So today I want to discuss, teach you money transfer. Money transfer. Good. So remember the last video I dropped on my YouTube channel? That was where I talked about market structure, right? And then I made it clear to you that textbook diagram is always low, high, low, high, low, high, low, right? And then I furthermore, and I said something that market structure is beyond this guy. That is where we have market do something like this. And I told you that market will pull back, maybe an incomplete or a complete pullback. Market will go up to fill FEG, base structure, blah, blah, blah. That was how I explained it, right? So this was the explanation I gave. And with this explanation, I will use this concept to dive into what I call money transfer, right? So what is money transfer? Looking at this structure, can you spot where the money is? For instance, we have a low, a high, a low. Where is the money? The money was there, right? The money is there rather. Market will come here, pick the money and then break it. Come here again, pick the money and then blah, blah, blah. You understand my point? So with this diagram, where is the money? And has the money been transferred? Where is the transaction? You understand my point? And before we can say anything about money transfer, we need to consider something we call momentum and distance. You understand my point? There's something we call momentum and distance. Now, what is momentum and what is distance? But before I dive into that, let me explain what I mean by money transfer and the concept of this ABC. So from there, we then dive into momentum and distance. You understand my point? Now let's dive into this. Now, this is our A, right? This is our A, this is our B, and then this is our C. Don't mind my handwriting. Then we have another one, right? Okay, before that, we have A, B, and C. This shouldn't be new to people that have been familiar with my, my YouTube channel. You understand this concept. I always say it in my previous videos. Now, this is my A, this is my B, this is my C, right? The C came up to take out this B leg and then sold off, right? So where was the money before? The money was here, and then when the market came, it broke this guy, it took out this B leg, the money that was here, this guy mitigated it and then transferred the money from here to here. The money was here before. This guy came up, it picked the order. There are some orders here. This guy came up, picked the order, and then sold off, right? So the money has been transferred from this guy to this guy. So where is the money now? The money is here. Right? Now, we have another A, B, and C. Where's my brush? Okay. This is another A. A, this is another B. And then this is another what? Another C. What did the market do? The market came up again, took out this B leg, mitigated this A leg where the money is, and then sold off again, right? So, you see, the transaction here is complete. Transaction here is complete. because we have another trading range after this market broke structure, right? Let me delete these two brushes. Okay. Now, the money was transferred from this guy to this guy, right? So where is the money now? Where is our fresh POY? Where is the money? The money is here. Then what will you be expecting the market to do? We'll be expecting the market to pull back, give us our B leg and our C leg. Then market will now come up, take out this B leg and then what? Drop. So we have another what? A, B, and C. Market took out this B leg. The B leg needs to be taken out to confirm a valid structure. You understand my point? So market came up, took out this B leg, and then drop. Then the money has been transferred from here to here. You understand my point? So where is the money now? This is the money. This is where the money is. I hope you understand. Okay, let's see something else. What if we have something like A, B, and C? Market take out this B leg, right? And then we have another A, B. Market then do something like this. Are you with me? So where is the money? We all know that this point has already grabbed this liquidity. This B leg has been taken out. So the money is here. And then this is what? This is our B leg, our external liquidity. Now, what do you think market will do? Market will come. It will raid everybody that have already joined this sell, that are already selling this guy. Come here and then what? Drop. So we now have what? A. This is our A, right? B, and then this is our C. The money has been transferred from here to here. So we have our A, B, and then C, right? So this money has been transferred from this guy to this guy. I hope you understand. Good. So I was saying something the other time. I said we have momentum and distance. You see, to validate, to know your value structure, momentum and distance must be spot in that structure. What did I mean by momentum? What did I mean by distance? Momentum mean FEG. You understand my point? That's your imbalance. And then the distance mean what? Liquidity. Where's my text? Okay. Momentum and distance. Right? Momentum means what? Momentum is this. Where's my, okay. You see, this guy is this. This is the distance. This B leg is the distance. And this momentum is this FEG. The FEG that is valid at this particular B point. I mean, this is our A leg. This is the FEG. This is our momentum. You understand? This is our momentum. This is the place whereby people would have actually set their orders there, right? And we all know that a lot of people will tell you that I also support it, that if you want to take a sell or a buy trade, always take your trade from the discounts. Is it the discount or premium level? I hope you understand what I mean. From the is it premium? I can't even remember, but premium or discount, meaning that market must pull back into your golden zone, something above, I think it's above 50%. So that's like we'll be considering, is it 68%, 71%, and so forth. You understand my point? So that is the golden level. And the golden level must have momentum. Understood? It must have momentum. Now, let me explain another concept for you guys. You see, there are times that you will see market do something like this, A, B, and C. Market will take out this B leg. Then we have another A, B, and C. Market will come here, take this B leg. Then we have another A, B, and C. Now, you will be expecting the market to come here. And don't be shocked. Market will just stop your eyes. Market might not come here. Market will just use the closest order block. Let me give you this secret. You see, market always go for the liquidities. Maybe the external, internal, previous days liquidity, blah, blah, blah. Market is always after the money, after the liquidity, where the liquidity is. See, understand my point? Now, once market take out the liquidity, the market will reverse immediately. And before the market will reverse, market usually do something. Market will use the closest POI to your liquidity. Understood? The closest POI to your liquidity. Now, market will just come here and then drop. Market has already used this POI. This is what we call volume violation. You just see that you'll be expecting that this market is coming here to sell off. Oh, it will be shocking that market will just come here and then drop. Meanwhile, a lot of people will be waiting for market to come here. It is possible for market to come here, but in most cases, market will use the closest liquidity points and then sell off. I hope you understand. Now let's dive into my chart. Let me show you the live example of what I've been preaching. Okay, where is my chart? Where is my chart? I need to, I don't know, I would have actually prepared I would have actually prepared the, okay, no problem. We can figure it together. We can figure it out together. I don't want to take a lot of time, you understand my points. Okay, so this is what I'm talking about. Guys, what can you see here? You see that market has already taken out this liquidity level, right? Oh, did I even explain what protected point is? I'm not sure. But then, let me explain what protected point is for you. You see this guy, this point is protected. This point is protected. Any point that take out liquidity, any structure that take out liquidity has become a protected highs or low. You understand my point? It has become a protected highs or low. Now, ask yourself, what happens when markets, I said this point is A, B, and C. Market has already taken out this B leg and the market blow structure. Now, this point is protected. Remember, this point is protected. I told you guys. Now, what happens when market violates this point that is supposed to sell the market? This protected point. Let me delete this guy. Now, remember, we are trying to take a sell trade here, right? What if market come here and then violate it? We are selling before, and then this protected point got violated. What happened? What do you think the market want to do? The market is ready for reversal. Isn't it? Now, market has already taken out this protected point. Now, we can say this is another A, B, and C. You now see that the market will come back to this B leg, and then the market will go off, will go up. Boom. Why? Because this protected high has been taken out. Very simple. Once a protected point is taken out, you can note it down. Once a protected high or low is taken out, expect a reversal. And before the reversal, always wait to see your A, B, and C before jumping on the trend. You understand my point? Don't worry, I will give you examples. And guys, don't forget to join my YouTube channel. We are not much on the page. Remember, I told you guys that I want to have a boot camp, and I need over at least nothing less than 200 people in my channel before I can introduce the boot camp. That's where I'll be dishing out a lot of things. These ones are just free content. Now imagine it is mentorship, or I'm trying to take to embark on the boot camp. I'll be dishing out a lot of things that you guys don't know. A lot of things. Now let's dive into this. I think I'm even saying much. Oh good. Regarding this content, what I'm putting out here, I'm really saying much. But then let's dive into this chart. I was saying something here the other time. I said that this is Euro USD 4-hour time frame. This point is protected. Why? Because market has already taken out this liquidity leg, right? So after taking it out, what can you see? A, B, and C, right? What did market do? Market take out this B leg and then break structure. So what happened? There is money here before. The money has been transferred to this guy, isn't it? And then we have another break of market structure here. Then after the break, what can you see? We have another A, B, and C. And the market came back, took out this B leg, and then went up again, break structure. So this is what our B leg. Remember the criteria I told you about, that there is what we call momentum and distance. So what is this? This is the what? The distance. And see where this market is buying from. Is there momentum? Yes or yes? Is there momentum? Look at this. This is FVG, guys. There is FVG here. So meaning there are a lot of orders here. So the market just came down, picked the orders, and then went up. Now, I was saying something, if you remember, I said this point is what? Is protected, isn't it? This level is what? Is protected as well. Now, where do you think we want to take another buy? A lot of people want to buy from here. And what did you see that happened? Markets came down, it took this guy out. This protected point has been taken out. And then we have what again? We have A, B, and C. Remember the last explanation I made. Whenever a protected high or a protected low is taken out, the market is ready for what? For reversal, which is in front of you. When market took out this protected low, then market pull back, pick some orders at this momentum. Are you feeling me? At this momentum, after picking the order, and then market drops. Very simple. And then we have another break of market structure here. The market pick order here. Right? And then we have another break of structure. See, it happens over and over and over again. What happened again? We have another ABC, right? Internally, this is our B leg. I will make another video for that. This is our B leg. And then you see what happened? We have A, B, and C. Market took out this B leg and then drop off. It is very, very simple. It is very simple. I know a lot of you will be like, wow, this is a magic. So that is how it happens. It happens in all time frame. Let's go to 30 minutes. Let's see too. It's on 30 minutes. It is always on the charts. I will explain that volume violation. You know, I remember I said something about volume violation and I was explaining too. So now, look at this current move on Euro USD. Market took out this guy and then broke structure, isn't it? Now, after the break of structure, what can you see here? We have, okay, this point is protected. Can you see? This liquidity has been taken out, right? And then market broke structure here and then pull back. What can you see? I believe you can see that this is what? A, B, and C. The market key took out this B leg. I dropped this setup on the YouTube channel, my Telegram channel. I was actually anticipating from this high. I mean, there is a particular high above, but market didn't get it before the reversal. But at least this market gave nothing less than 1:5, 1:6 before the reversal. Now, see what happened. This point is protected. Market took out this liquidity level. Can you see it? And then went up. Imagine taking a buy somewhere around there, your stop loss, and then you should give like maybe 1:4 or 5. Let's see. Okay, this is 1:4, right? Even I'm not teaching you the strategy yet, just explanation. You can use it to catch your trade, your setups. Now, what can you see again? Market took this guy and then broke structure. Yeah. And what can you see? You can see that this particular level, market took out this liquidity area. right? Market took out this liquidity, meaning that we are supposed to take a buy trade here. Now, market took out these protected points. Remember I said money was transferred from year to year. And then internally, money has been transferred from this guy to this guy. So market is supposed, a lot of people are looking out to take a buy setup here, right? Now, what do you see? Market took it out. Now, after taking it out, where is our B leg? This is our B leg, right? So later in the future, I'll be expecting the market to come here and then drop. Don't forget, I'm not giving you a signal yet. We are still bullish on Euro USD. We are bullish on Euro USD. So this is just a retracement. Market just coming back here and selling. It's just a retracement. You understand my point? So that is what we call money transfer. Let me show you another one. Okay, I think this is a very clean price action. What can you see? Market took out this liquidity leg, isn't it? Or before that, what is this? We have A, B, and C, right? Market took out this B leg, isn't it? This is the B leg, which was taken out. So this point is protected, and the market broke structure. We are supposed to take a buy trade here, but this place failed. So meaning the trend has changed from bullish to bearish because market has already taken out this protected level. Now, after taking it out, what can you see? We have A, B, and C. Market came up. This is momentum. This is the distance there. This B leg is the distance. Market mitigated this guy and then drop. We have another A, B, and C. You understand? Now, market mitigate this guy. Then market came back again, mitigates this guy, and then drop off. We have another, and then drop off. Can you see? Then later in the future, what can you see here? Market took out this liquidity level and then weak this low, right? So this level is supposed to sell the market, but it failed. Market has already taken it out, isn't it? It has been taken out, meaning that we are not selling again, we are bullish. A lot of people will be like, where's the B leg? Now let's go to 15 minutes. Let's see if we have our B leg. Take a look at it. What is this? This is the B leg. The B leg is there. And how will you know that this point is protected? You know this point is protected. Why? Because this guy has already taken out this liquidity. There is liquidity here. I mean, there are a bunch of liquid. I don't even know. So there is liquidity here. You understand my point? There's liquidity here. Market took this liquidity out and then broke structure. We have another liquidity here again. That is why the market came all the way from this guy to pick order here and then went up. Can you see it? I also caught this buy. There is a buy here. I think I caught it on 5-minute time frame. I have this set up too. Let me show you. On 5-minute time frame, market gave another A, B, and C. Okay. So that is all on money transfer. That is all on money transfer. Okay, yes, this is it. What can you see? What can you see? Let's take a look at this guy. Let's check it together. See this now. We have a VR here. I've not said anything about VR. We have a VR here. That is why the market mitigate this guy and then went up. But this VR, did it take out liquidity? Yes or no? This liquidity has been taken out. There are these pullbacks have been taken out. Then we have an internal break of market structure, right? Then after that, did we have another ABC? See, this is A, B, and C. Market came, took out the B leg, and then went up. A lot of people will be like, where's the momentum? This is the momentum. Where's the distance? This is the distance. I hope you really understand this section. Let me show you another example. It happens over and over again. Happens over and over again. It happens over and over and over and over and over and over again. Look at it. Just go on your charts. Go and check them out. You will see it. Everything is on the charts. Look at this now. Market took out this B leg, right? And then market broke structure here. So what is this? This is A, B, C. Market took out this B leg, mitigated something here, and then went up, broke structure again. Now, what do we have again? We have another A, B, and C. Market took out this B leg again, and then went up. It happens over and over and over again. Even this buy on Euro USD, where's the buy? This current buy. Check it out, you will see it. This point is protected, right? Because there is sweep of liquidity here. And then market took out this liquidity level. Can you see? Yeah. Let me mark it out. I'm about to end the section. This is A, B, and C. Market took this out. Another A, B, and C. Market took the B leg out, right? Another A, B, and C. Market took this leg out again. Then what do you see again? If you go on 5 minutes, this point takes something out. And also it is VR. Don't worry, I will explain the VR in another video. So here now, we have another break of market structure here, isn't it? Now, what can you see? This is after that, we have another A, B, and C. Market took out this B leg out and then broke structure again. We have another A, B, and C. Market took out this B leg out. Can you see how it happens over and over and over again? You see how market took it out? Market took it out and then mitigated something here. It happens over and over and over again. Just go and backtest it on your charts. So that is the end of this video. I will see you in my next video. Don't forget to share this channel to your friends, your family, your enemies. So catch you up later in 2026, guys. Double.